Morning, everyone, and welcome. Excited to be here today alongside my colleague and friend, Michael Kehoe from Fairfield Commercial Real Estate. My name is Kieron Hunt. I'm the planning studio lead at FBM Architecture, Interior Design, and Planning, based in Halifax, but I have had the opportunity over the past 15, 20 years to do many projects and work for many communities throughout Alberta, including Grand Prairie, County Grand Prairie, Lacrete, High Level, numerous others. So I'm no stranger to the market. I'm now in Halifax and looking forward to making my way back out there soon. In my background, I've conducted a lot of market analysis studies focusing on retail in the Alberta market and across the country. So I have an understanding of the local markets, both the urban and the rural contexts. And it's my pleasure to talk today with Michael about retail trends and what's happening in the leasing world and how these have an impact on the Canadian landscape, but also on the Alberta landscape as well. So with that, I'd like to introduce Michael Kehoe. He'll give an introduction to himself there, and we're gonna, in our talk today, the slides are going to be rotating, and you're going to see a number of images there that may not make sense at the start, but as we get through this conversation, they'll start to make more sense to you. And with that, Michael, away you go.
Thank you very much, Kieran, from Halifax. And My name is Michael Kehoe. I'm the broker owner at Fairfield Commercial Real Estate in Calgary. And I've worked many years in Edmonton as a shopping center manager, managing major malls there. I've worked on shopping centers and retail leasing in Grand Prairie and Fort McMurray and other northern markets as well. So it's a great pleasure to be with you today. And I guess just from an introductory comment and overview, in 2021, we're expecting it to be pretty much a redux of 2020 in the retail and food service consumer real estate industry, and we're looking this year to be a bridge to better things in 2022 and beyond. I mean, any real economic recovery is not likely to occur in Alberta until at least 2023. And I mean, it's a can of worms out there on many fronts, but we're making the most of it. I mean, it's terrifying and exciting at the same time. That's what I'm seeing. Are you terrified or excited, Kieran?
If you'd have asked me a year ago, I'd have probably been terrified. Right now, I have some cautious optimism, but I also have trust that we're now a little bit more prepared for what could happen. I think when this first happened back in around this time last year, this was all new to us. This was only stuff we saw in movies, and the reality of it hit hard. And I think nobody knew how to really adjust to it. Retailers are probably the best people for learning to pivot and adapt, and that's certainly a word that repeatedly we've heard over the last year, the ability to pivot and be flexible, and it still continues moving forward. So I'm cautiously optimistic and hopeful that we've learned and we're able to continue to find ways. Retail is always changing, and because of that, this volatility that we've been through in the last year, I think will pave the way for new trends, and we're seeing that. With a lot of new exciting trends that are happening, and some of them we'll talk about today, whether it's the old bugaboo about e-commerce and how that's changing things, to the omni-channel retail, which I know we'll discuss shortly, but other things like buy now, pay later, how people are changing their consumerism behavior coming out of this, and what that's going to do for the next year. Pop-up shops, health and wellness, the role of what's changing for remote working and how that's affecting retail. So through today, we'll chat a bit about that, you and I, and share with everyone who's watching this some of those exciting challenges and opportunities.
Yeah, we're seeing it's such a real evolution right now, especially during these times of COVID-19, omni-channel retail, which takes in online shopping, shopping from retail stores and other channels. Um, the death of bricks and mortar retail is highly overstated in the media. And I mean, it's just a fact that a bricks and mortar store is the blue chip workhorse of any retail strategy. And we're seeing that the importance of having omni-channel, various shopping channels for retailers is critical. But one of the trends that we're seeing is the rise of pop-up retail, and for both retailers and food service tenants. Like retailers love to test drive new concepts. Chefs are willing to test drive new food service offerings. Building owners need to have their vacant spaces pop up ready to accommodate these entrepreneurs. Think of it as swing space in these troubled times where there might not be a permanent tenant available right away. You can fill that space with a pop up retailer, or if it's a food service space, a chef or food service professional who wants to try out a new concept. These are kind of the golden days of pop-up retail. Stores and restaurants in Canada, seeing it's a real evolving trend. I mean, rising consumer real estate vacancy levels in the age of COVID-19 right now, providing opportunities for retailers and chefs, restaurant owners to test drive new product and menu offerings on a short term basis in a low risk environment. And it proactive and creative landlords and building owners seeking out these pop up tenants to keep their storefronts activated and to incubate new long term tenants. You never know where that next long term lease comes from. And, that's what are you seeing on this front, Kieron?
It's a good point. I think, a statistic that I read recently was that about 61% of holiday shoppers actually drop by a pop-up store over the holidays. And where I see this most relevant, even out here in Halifax, an international, one of the largest sporting good operators in the world, Decathlon, who has one location in Montreal, they were setting up a larger store out in the Halifax market, but they first used a pop-up store to test and to get the market excited about their concept. Now that's a much bigger brand on one scale, but what I'm finding in a lot of smaller secondary communities and rural communities throughout the Alberta market, even across the country, is there's a lot of vacancies in small towns. And one way to cultivate and stimulate entrepreneurial activity is to create these spaces where people can operate pop-up shops. And that speaks to one of the other things I think is important that we'll deal with, and that's the landlord-tenant relationships. Because sometimes we're dealing with spaces that are where some landlords have 2,000 square feet and they're trying to find the perfect 2,000 square foot tenant. Where the reality of the market suggests if you were to break that into 4 spaces or allow for pop-ups in those spaces and come up with a creative lease structure that allows and promotes some local entrepreneurs for setting up a business. It might be a home-based business that wants to try and move in, but they don't want 2,000 square feet. They might want 500. So you can then work towards cultivating and growing this. And there's lots of these spaces available in communities. And I think that they're underutilized, and the expectation is that they're kind of stuck in a mentality where they want that one tenant, but it's not always there. So broadening the opportunity base is certainly something for pop-up shops. I sort of look at pop-up shops, and you're from the shopping center industry. Michael and I have known each other for many years. And being in the shopping center, in the traditional mall, I see pop-up shops as sort of the new kiosk format. Everybody knows what a kiosk is in a mall, and they're highly successful. Seasonal leasing structures, but I think in the real world, we have this reluctance on a main street or in a non-traditional retail environment to be apprehensive of pop-up shops. But they themselves have a lot of value to the communities and can create a lot of great opportunities because a lot of people have small space. They have only 1 or 2 ideas that they're trying to merchandise. So I find that pop-up shops is certainly one of the keys for activating and animating local space in communities. What do you think about the leasing structures on these, Michael?
Well, Landlords have really sharpened their pencils. Building owners have really uh, leaning in and bearing down to keep their storefronts activated and accommodate short-term leases and try to incubate new tenants that could lead to long-term leases. And I think this is really, really the way to go. And I mean, it's a great segue to the, uh, to our next trend, which is tenant landlord relationship in consumer real estate. It really is evolving and changing. I mean, 2020 was a year of bloodletting in Canadian retail and restaurants. One of the significant events has been the reemergence of the importance of the tenant landlord relationship. I mean, many consumer real estate tenants woke in mid March last year to the lockdown and rolled over and wondered who their landlord was that they were in bed with. Um, when they needed rent relief or to talk about the lockdown, it seemed that few on the tenant side knew who to call when the lockdown hit. And we were witness to all manner of landlord reactive and proactive behavior, ranging from evasiveness to denial on one extreme to outright empathy and cooperation on the other. I mean, this renewed tenant landlord relationship, the parties realized, that rent is more negotiable now than ever, and it's more a function of the tenant's sales and not just a product of the landlord budget. The major landlord swagger we saw on the big properties in the big cities evolved into a stumble, and in some cases, a complete falling down on the tenant relations front. Much progress has been made, and there's a correction is well underway. Will lead to a more tenant-focused environment in 2021 and beyond. And I mean, as Kieron mentioned, retail is always changing and evolving, and we've seen almost 10 years of change in the past 12 months in this time of accelerated disruption. So it's been really interesting. And although there were in the thick of the transition of the consumer real estate and retail industry, we're still kind of in the birth canal of this process. Will go well into 2022, I think. Um, Many retailers and building owners are struggling to cope with the changes and an unknown future and what could be for the future of retail and restaurants in Canada. So it's going to be interesting to watch. I'm kind of a student of the industry, and I like watching these trends, seeing all kinds of human behavior. So it's going to be fun to watch. The dynamics of the tenant landlord relationship are certainly in transition. I'm sure you would agree, Kieron.
Absolutely. I think, as with any industry, it's about relationships. So we have the relationships of the customer side, the retailer side, the landlord side, the relationship with the communities and the developers. So there's many different layers, and it's very complex, and everybody has their own desires and wishes, and sometimes they're in conflict, and that's the hardest part. I think one of the positives that I have seen come out of this is that people are becoming a little bit, maybe the greed has been usurped a little bit by a more of a reality check, and I think that's leading to better relationships and trust and empathy. And for a long time, I think people, retailers felt they were not at the they were at the whim of their landlords, and I think that things are changing in those relationship structures as well. And consumers are dictating this, though. At the end of the day, if you look at it from a hierarchical relationship, the customer is the one that's dictating everything that's going on right now, really. There is a social change happening in consumerism, and that's whether you look at the nature of loyalty. There's that term that we hear right now a lot is this cancel culture, and there's a loyalty is fickle. We see that with My Pillow right now, and the backlash to that organization. But you have local retail and supporting local retail. So when you talk about the landlords and you talk about this shift for consume this shift of consumer behavior. There's a shift towards supporting local more than there ever has been in the past. And I think part of that, what I've seen out here and across other markets, is that the first ones to respond to the pandemic were the small independent local retailers. They were the most nimble, quickest to adapt, and they gave back to their communities when they probably had less money than the bigger brands did at that time. So they were the first to give back and respond. And what's being paid back in dividend to them is support from people. And this is also being aided by another trend that's partly happening, and that's the role of remote workplace and the impacts that the remote workplace are having on consumer behavior. Now, with less people commuting downtown and working downtown, there's an ability and a willingness and an acceptance in the industry now by employers to allow staff to work remote. So you have more people working in their suburbs, more people working in rural communities, or choosing to live in those communities because of this ability. And that has an impact on retail opportunities in those urban centers in a negative way, but it does have a positive impact on these secondary and rural communities by providing a better opportunity for support and attraction of retail spending, which is something that I look at a lot when doing these market analyses. A couple other things that are, I think, quite pivotal in that social behavioral aspect are the idea that price still is important to people. In all studies, whether they're looking at online shoppers or you're looking at physical store shoppers, they're still looking at price as their key variable. Some studies have said 80% when you're shopping an in-store consider price as the most important factor, and it's 77% for online. So still very, very significant factor. But there's also two other components that I think are important in this social behavior that's evolving. One is this ethical buying and a support, not just local, but supporting Canadian made product or product that's sustainable. I think we're seeing a big shift towards that. And I think that's significant, but also the role that influencers are having on retail. And we're witnessing that living and breathing today, although you're seeing this a few days after the events, but with GameStop and AMC and the role that Reddit has had in the stock market, the social influence on consumer behaviors is immense. And local communities now have the ability to get positive social presence, and that can have an impact in a positive way for retail. But it's something that's changing, and that's being driven by the demographics of the consumers. This all feeds back into why it is important that the landlords and developers have this strong relationship, because at the end of the day, the consumer is driving the bus, in my opinion.
It's very true, Kieron. Your comment about Main Street retailers in small markets, that's really where the action is. They're close to their customer, um, can react very quickly to trends on a local level. And all leasing is local now. Everything is happening at a micro level, at street level. And we're not seeing national chains and even the regional chains being reactive to expansion opportunities. Local retailers are. And kind of segues into our next trend point is the challenges that retailers are encountering. And hardest hit category in retail has been the um, fashion retailers. We've seen a lot of closures and bankruptcies. But I think it's going to be the one of the first categories to bounce back quickly in a big way when things open up after the pandemic lockdown and restrictions are relaxed. People are going to need new clothes. I mean, put on the COVID-19 and they're going to have to fit into something when they venture back out, either to the workplace or out into the public. Um, so it's been interesting to watch. One other factor is the cost of shipping merchandise to retailers. This is a big concern. Um, Cost of securing stock is a significant challenge for many retailers across Canada, especially in the north. We're seeing delays in overseas shipments of up to 30 to 45 days due to backups at ports in Los Angeles and in Vancouver. In this era of just-in-time delivery, this is going to impact retailers. Also, factors like factory shutdowns in China due to COVID surges and the Chinese New Year, it's affecting the supply chain. Some retailers I've spoken to are even flying in merchandise from overseas, which is an interesting aspect. There's a shortage of containers worldwide, and shipping costs have increased up to 3 to 4 times from a year ago. That I'm hearing some retailers tell me, and there's no doubt cost of everything is sure to go up due to these factors. And back to you, Karen.
Yeah, a couple of comments there that I find interesting. Again, if I think about the consumer perspective, when you look at statistics now and you see that shipping, price of shipping is a big factor in how people view their online purchases. Those people now, especially even if shipping time has gone from 6 days to 4 days, that's still not good enough for people. And even those that have Amazon Prime accounts are wanting things shipped quicker. So often it's those retailers that are able to differentiate themselves and find ways that to get product quicker to their consumers. And the balance point here is that most people are looking for free shipping, but free shipping doesn't help the retailer necessarily. So there's a balance point there, and I don't know what that is yet and how that will filter out. There's a lot of online companies that offer free shipping, and they simply aren't making a lot of money on the basis of that. So again, that ties into the initial comment about omni-channel retail and having to have a physical store presence. When we look at some of the merchandise, one of the other trends that's part of this, and some retailers are dealing with this. If you look at Decathlon, it's they are actually creating their own private labels, and private label retail is finding a new niche moving forward, whether it's Decathlon, who have no brands in their stores. Imagine a 40,000 square foot large format that does not have one brand of any name. It's all private label, manufactured product by that retailer. But LL Bean, who's opening a physical location out here in Halifax soon, again, private label, great history. So they can control a bit better their logistics and their supply chain for that. But there's also the rediscovery of the vintage and the vintage market, so to speak, not the pawn shops, but the vintage market. There's a great store in Calgary that you're probably aware of, Michael, called Reworks, which is tagged as sort of a green lifestyle marketplace. It's a small retailer, but there's a bit of a difference for retail of that type. Again, on not so much private label, but they're reusing local goods to create other goods and merchandising them in a higher quality environment, both online and physical stores. I think the whole aspect of transportation is certainly causing an issue, and it comes back again to price reigns supreme. The customer and price reigns supreme. So whatever challenges they face to get products is always going to be something that I think has to be dealt with. I was reflecting back on the biggest challenge we had prior to the pandemic was the rail strikes and what that caused on getting products into markets out here and elsewhere in the country when there were blockades on the rail lines. And who would have thought that would have been gone by the wayside for the pandemic, would have caused even more issues. So I think there's definitely challenges on that front. I don't know how you're seeing, in terms of other trends, how are you finding, you talked about the retailers as far as the fashion industry being the hardest hit across the board, but there have been others that have been successful. And I can think of the health and wellness component has been one area, not so much in fitness itself. Fitness locations have really struggled, but the home health and wellness and that emphasis on health and wellness has really started to gather resurgence. The likes of Peloton, home memberships, home gyms. We know it's impossible to buy a set of dumbbells anywhere of late. So there's also a realization that inevitably, as a population, we're aging, and but we are looking at the factors of health. So, in terms of, it's always interesting to look at the negative and say retail is and fashion is taking a hit, but there are other successes. And from your perspective, Michael, how have you seen some of those successes?
It's a complete polarization in Canadian retail right now. The value end of the spectrum is doing very well. Dollar stores, consignment stores, secondhand stores. Um, it's just rock star performance for them, and there is an appetite for retail space from those people. And at the other end of the spectrum is the luxury category, which is just off the charts successful across Canada in shopping center venues, venues like Holt Renfrew, street venues, high end Bloor Street, Hobson Street. You have the Louis Vuitton store in West Edmonton Mall that in their first year did $20 million. Equal success in Calgary at Chinook Centre with their store there. We're hearing lots of examples of the high end luxury market doing well. The people that have money want to spend it, and want to indulge themselves. Right now, they can't travel, but it's it retail, as Kieran said, it's always changing, and I think it's important to look back at history and just to put it all into perspective. And I mean, the white elephant in the room right now in Canada is the Hudson's Bay Company, and they've had their problems. We know, and I'm expecting them to close up to 30 stores in Canada across their various banners this year. So it's going to be interesting. They'll probably spin off Saks Fifth Avenue and off Fifth Division. So, but it's important to look back the current state of the Canadian retail. I mean, over the Hudson's Bay's 350-year history of of that company, and they've had a great influence on the North. So it's a direct relation to our talk today and this gathering. Um, the over their 350-year history, infectious diseases have disrupted the company more than any other factors like wars or economic recessions. I mean, the fur trade, brought smallpox, influenza, and other great colds to remote indigenous communities starting in the 18th century. And the Hudson's Bay Company had to adapt and change up its business model, moving away from having generations of mostly Cree traders and trappers that purchase furs. Um, you know, they purchased furs inland and brought them to Hudson's Bay. I mean, 250 years ago, the disruption caused by uh, disease led the company away from stable business plan that guided it for more than a century toward the exploration of central and geographically unknown continent, included northern Alberta. I mean, not only did the smallpox epidemic of late 1880s devastate indigenous society in Western North America, it changed the direction of history, radically transforming prevailing commercial networks and setting in motion the Hudson's Bay Company's exploration of what is now central and Western Canada. I mean, I have no doubt that the company will survive the current pandemic. The greater threat is online shopping, and maybe the most devastating, and the future is uncertain for the Hudson's Bay Company. They play such a large role in retail in Canada, often owning shopping centers and their real estate in downtowns. Um, I think we have to watch this closely and adapt as they change. And I'm sure you'll agree, Kieran.
No, absolutely. I think we're in for an interesting time. We've gone through this with Eaton's and with others. I think that my perspective moving forward is that what we defined as anchor tenants and has changed and is continuing to change. Size doesn't always matter. And as your sign says behind you, location matters. But biggest isn't always best. I think that what you're going to find is that the Bay has some incredible assets and real estate assets. So there is redevelopment, or there's money available for them through the redevelopment of some of these great locations that they have. But there are struggling suburban assets that they have as well. So again, it's part of that relationship, working with the landlords, the shopping center operators, to figure out what works best. I foresee a downsizing, at least in some of their locations. They may still wish to have a presence, but they're going to have to downsize. If we look at their floor space here, how much floor space they dedicate to categories, fashion is their biggest market, and we know that fashion is fickle, and we're seeing that. And while retailers are struggling for fashion, I think they're going to have to probably revisit how they merchandise their stores, and how much they carry. So I think that's a big factor moving for them. E-commerce is we haven't talked a lot about e-commerce in that role. We know it's there, and I would go so far as to say that e-commerce isn't really online shopping anymore. It's simply shopping. There is no distinction. When we're online, we're shopping. So I think that moniker is sort of going by the wayside. And I think the Bay, in my opinion, the Bay has probably been one of the weakest online venues for retail. And I think that's evident when you compare how people are shopping. And I think there's another reality that is happening in the fashion industry is the increasing use of augmented reality. So the Bay has always been, I don't want to call them a relic. They've tried to refresh, but I think they have always stepped on their toes. And it seems like they start off well, and then they have a glitch, and they fall back into some old habits. And I think there's just something there. I would hate to see them leave because of the legacy they have for this country, but I think there's a reality that's going to need to be faced sooner than later. And they did try to bite off more than they could chew with going after bigger U.S. companies, and thinking it's that belief in themselves that we're the Bay, we can't fail, and it's just not true. So I think there is a reality check that they're facing now.
I think you did call them a relic there, Kieron. Yeah, there's no doubt the current owner is very much a real estate player and less of a retailer. So I think the future of the Hudson's Bay Company is clouded. But yeah, and in our closing comments, over to you, Karen.
Yeah, I think to go back to what you said before, am I terrified? No, I'm optimistic. I'm seeing a lot of exciting trends. I'm most intrigued about what this means for local entrepreneurial activity, local smaller retail, more specialty retail size shops, and I think adapting to new realities in the market. I don't think it's all. Again, I really do believe that the big anchor tenants, or what we used to portray as the big anchor tenants, aren't as important to the communities as some of these high value destination local businesses and local shops. And I think there is an opportunity to rediscover the value of local main streets and local downtowns, especially in some of the secondary and rural markets that we see throughout Alberta. So I'm encouraged for what there is there. At the end of the day, again, the customers are the ones that are at the leading the way. Value is important. Value really matters more than anything else still, and it's just something we need to face. But I think there's a great opportunity moving forward. I think there is, though, we are in a period right now where demand is low. Tenants are reevaluating their portfolios. Starbucks is closing urban downtown locations that are walkable, and they're looking at relocating and developing more drive-throughs. So we're going back to a bit more of the drive-through culture coming out of this. But retailers are re-examining their portfolios. So I think there's going to be a little bit of a delay before we understand fully what the opportunities are coming out of this. I don't know what you think and what you're finding. You live and breathe it every day.
Yeah, I think what we're seeing is that um, retail is an ecosystem in each market, and in the smaller markets, I know in the north, you have a captive market in your trade area. I think it's important to look at it as an ecosystem unto itself, where you can incubate and germinate new retailers and concepts, entrepreneurs, and keep things going in your markets. That's critical at this time when a lot of retailers and food service tenants are on life support and being supported by government programs or rent breaks from their landlords. I think we've really got to look at things from that flatline base level. Look after your ecosystems and the people in your markets, and we'll live to fight another day.
Yeah, retail has been through this before. They'll go through it again at some point. There's so much information that Michael and I could talk about for hours, and we often do it at conferences and whenever we catch up. So we're really delighted to have the opportunity to have shared this information and this chat with everyone at the Growing the North conference. And for myself, I want to thank you, and Michael, I'm sure you have a final word as well.
Enjoyed the conference, everyone. It's been an honor to be with you today. Thank you for seeking our opinions, and we're happy to share our knowledge. And if you have any questions, feel free to reach out to us through the conference contact information. Have a good day. Thank you.
Thanks very much.